Hi, everyone. Welcome to yet another episode of Disruption Talks. And as you might have seen, we've narrowed it down recently to retail and fintech. And this episode, no less, is about fintech. It's about buy now, pay later. And you might have seen some previous publications and interviews concerning buy now, pay later during our Disruption Forum, fintech, in April, if I recall correctly. I spoke with people from Adyen, from Starling Bank, and from Solaris Bank concerning lending. Had a short conversation with our own Tomasz Grunkiewicz concerning buy now, pay later when we did mention Zilch. And today, figure out our luck, we have Philip, the CEO and founder of Zilch, joining us today. So from just briefly mentioning in a casual conversation to now having you here, I'm lucky. Hi, Philip.
Hey, Philip, good to see you.
Good to see you as well. So, there are so many things to congratulate you on and wish you even well, because you're on a Sunicorn path to a unicorn. Pretty sure, given the ecosystem and landscape in investing, any month now, I see a unicorn valuation. But that's what I know. Let's make sure that the audiences know exactly the same that we do. So, let's start with a short personal introduction of who are you, what happened with Philip before Zilch, and then we're going to dive into explaining how Zilch does buy now, pay later differently or better than others, right?
Brilliant. Sounds good. So, the short story of my background is that I've always been a tech entrepreneur. So, I studied artificial intelligence and mobile development in university, and that's what I built my thesis in, was in AI. And ultimately, when we got to our final year and we had to present a project, I realized that the university would actually own the IP. So I had an idea to start a mobile peer-to-peer gaming business. This is not gambling. This was social gaming, games like Farmville, etc. But this was now 17 years ago. And then I realized that the university would own the IP. So I decided to do something different, which was more in biometric security. That was an interesting project, and subsequently we ended up winning the project nationwide, but ultimately chose to then leave university and immediately start my first company, which was in mobile gaming. And that was social gaming. Basically, you could log on and compete against your friends. But this was when people were still using, Samsung D600s and phones like this, not iPhones. And needless to say, long story short, we started with games, and you would have to buy credit in order to compete and play. And you could transfer credit from one person to the other. And ultimately, people stopped playing the games and just were transferring the credit to one another. So we realized that we were maybe not the best game production house, but had actually built a peer-to-peer mobile payments platform. And so we actually stopped creating the games, we got rid of the games, and we kept the person-to-person credit transfer portion of the business. And that became very successful. We rolled that out into about 22 African countries out of South Africa, and ultimately went into a number of products like airtime credit lending, airtime person-to-person transfers, and then migrated that into full-blown payments with the likes of MasterCard as a partner. We became the first cash to virtual card issuance for Uber in Africa. And basically this meant a customer could take cash and go to a grocery store and then now take an Uber without having to worry about how they do that digitally. So that's really how the business evolved. My last venture. So I've always been in mobile payments, fintech, financial services. And then from there, about 6 years ago, moved over to the UK and was looking for something new to do here, a new venture in the space. And ultimately, came across a couple of companies we thought were quite interesting, some of which, I always talked about in the buy now, pay later space. And ultimately, what we did is we looked at the opportunity to leapfrog these companies. How is it that we can do something in the space that's better? Because a lot of these big players are phenomenal companies, but they've been around for 15 years. So, so they have that institutional debt already that's inherent in a long-standing business. They cannot move as fast, of course, because they're bigger entities already. And they built technology 10 to 15 years ago. So, how could we deliver a service like buy now, pay later with technology that was, really built in the last few years rather than 10 years ago? And that's ultimately what we did. And a bit about my background.
a solid bit, and I really like the serendipitous discovery from gaming to finance. I guess the destiny calls, and you just can't escape it. And when you mentioned the mobile payments, yeah, I think I did watch your MSNBC interview in 2017, South Africa, if I recall correctly, the evolution of mobile money. So yeah, all the dots are coming together. Um, okay. So before we dive more into the company, I wanna interrogate you personally a little bit more. What does a day in the CEO of something as rapidly growing as Zilch look like, other than crazy busy?
Well, I mean, I was about to say that, what's great about these interviews with big corporate type CEOs is they can give you a succinct view of a day in the life of them and their business, because it's a well-oiled, long-standing machine. They get up at 5 and they do this. So I would love to tell you there's a great story and very succinct narrative for me to give you here, but the reality is every single day is different, right? So with things as fast moving as we are in our company, 4.5 months ago we were 15 people in the business. Today we're almost 100. We're welcoming almost 10 new starters to our company every week at the moment. What's interesting is that every single day is very different. So in terms of how I carve out my time, really what I like to do is spend a lot of my time on product and product strategy. So I spend a lot of my time with the product team. And then ultimately, outside of that, spending my time chatting with my co-founder and talking about the corporate finance strategy of the business, because a lot of people tend to ignore the fact that when you build a startup or any company really, you're selling to two audiences. You're selling to consumers, and you're selling, of course, to the stakeholders. So the purpose of any business, of course, is not to raise or even make money. The purpose is, of course, to better something or an experience for a customer. But unfortunately, you need money to do so. So you're consistently selling to stakeholders and at the same time selling to consumers. So I spend a lot of my time working on the product and product strategy with the product team. The rest of my time I spend divided between stakeholders, with my speaking with my co-founder, looking at the stakeholders and looking at our fundraising strategy. And then really the most important piece outside of that is people. So, I spend a lot of time looking at the people in the business, working very closely with our COO around the people in our company, onboarding people, making sure they understand where they fit in, they understand the business, and of course the culture. So for us, fundamentally, we feel like it really doesn't matter what challenge we have in the company. If we have a phenomenal culture and great people, we can overcome pretty much anything. And that really is, the view we took when COVID came along and made fundraising a bit difficult at the beginning of last year. We've got great people in our business, and we've got a phenomenal culture in our business. So the mindset is we will get it done. Not necessarily what if. We don't think about what if it doesn't happen. We focus completely on how we will make it happen. And I think that the culture plus the people is really important. So that gives you at least a view. But in terms of tasks, every day is different.
Yeah. I don't think I got the answer that the question wanted, but I got a better one. And like you said, it's essentially an arbitrage between, hey guys, can I present enough value for you here so that I can come back to the consumers and get this sort of merry-go-round of value going. And you did mention a very nice thing, very nice because it gives me a super smooth transition, a segue into people. You, at least within the 10 minutes that we've got going, seem like an extremely magnetic person. And that also is reflected not only by what you talk about people and the importance of them, but the facta non verba from Latin. So actually facts speaking louder than words. You have the VP of Data Science at Klarna, Maniz is ex-Chief of Analytics Officer, ex-head of global clients at Facebook, and recently our own Polish CTO hired at I think just yesterday. I just saw the LinkedIn post. So first of all, major congrats. But second of all, can you speak more about this personal engagement? Because of course, startups are lucky when they onboard an X whatever the famous startup is, but here it seems like you have done it on a wholesale basis. So what's the secret? Like, how do you do it?
It's a difficult question to answer. I think, believing in our own vision is certainly what helps. We talk about this with customer service, customer support in our company. If you think about it, if you're a customer and you dial into customer support the way we used to dial in, right? Today it's live chat and things like this, of course, but you can actually feel if that person wants to be at that business, even across the phone. There's an intrinsic feeling you get from people. And the reality of the situation here is it doesn't change. We're all people. It doesn't matter if the ex-CTO or COO of something. The reality is you want to get a sense from someone that they genuinely believe that they're going to change the world in some small and contributing way, right? How are we going to help somebody at mass to go and do something they otherwise couldn't do? And do we genuinely believe in our own story? And I think with us, the one thing we have in spades is belief. We genuinely believe that we will be successful in this venture. And I think that comes down to the ethos of the business and how we go about doing things. We think obviously this is a red hot space. We think it adds phenomenal value to consumers, and we're doing everything we can to make sure that we build a business that is worthy of consumers using our product. For instance, getting our FCA license 2 years before we had to get the license. For us, we always look at, you tend to judge a person on how they behave when no one's watching, rather than when people are watching. And so for us, I would say first and foremost, we genuinely believe we can be successful. And I think that resonates with people. So when I chat to people and our team speaks to people and says, you should come and join Zilch, you should leave that fancy business and come and join us, I think people can feel that momentum and that passion and belief, and that helps. But of course, obviously, as the business builds and you get more momentum and you get more exposure and you have more conversations like this, and you get published in Forbes and you have all these things, of course, naturally, more people gravitate to the business. And in fact, I almost find that harder in some respect, because what you do find is you get a lot of people who now want to jump on the bandwagon, but don't necessarily, have the work ethic that we look to, and the true belief in what we're doing. And so for us, it's really important when we're having these discussions, we take our time in making these placements, because for us, we really want people to want to be at Zilch. It's the one question we ask people when we interview them is, we assume you have the skills and you might be great and we might want you, but do you want to work at this company, and why? And I think, all of that really, you package that up and put a nice bow on it, that whole package, I think, is attractive to the type of people we want. It's not attractive to everybody, but it's attractive to the type of people we want working in our business. And so we have been quite lucky and fortunate in being able to attract some really top talent. If we look at our business now, almost 100 people strong, we're about to we're hiring another 100 odd people. And really, we always say to people when they join our company, this is really the A team that we're building. We don't want anyone ever going home and thinking that they picked up the slack for someone else in the business. In fact, most days you leave the office or, you finish work at home for Zilch, you think to yourself, maybe I should read up on what I'm busy with. Maybe I should get better at what I'm doing, because, this team knows their stuff. And so, so all of that culture plays into it. And when people come to the office and meet our team, they can feel it. And that certainly helps to attract this type of talent. So we're very fortunate and we're lucky. We know these people can work anywhere, and we're very privileged to have them choose to work with us.
I need to call you out. I think it's a blatant lie to just call it luck. I think it's serendipity, luck meeting preparation, because it's not just, you bumping into those people. You are actively doing what you're doing just to me. So sharing that belief and outsourcing this credibility into my ears just via the means of this conversation, and 100% appreciate the simile between when people act the way they act, if they're watched or not. So Plato's Ring of Gyges, right? Rings a bell.
Yeah.
So I wanted to dive into Zilch itself more right now.
Yeah.
So of course the media loves a juxtaposition. So who's the rival? Is Zilch the rival of Klarna and Buy Now Pay Later? But I think what would be better than just, putting two companies in a ring, rather looking at the whole ecosystem from a macro perspective. And the industry typically operates on the basis of Here I am as the person who wants to spend the money. Here is the merchant that allows me to do so. And somewhere in between, there's a tiny BNPL slither just at the payment stage where I'm able to choose buy now, pay later. But that is a very, how do I call it? A very non-flexible, non-elastic, non-agile, definitely approach, because you rely on the say-so of the merchants. If the merchant is not working, and the customer goes somewhere else and there's no layer of BNPL from whatever company, you just lost that business, right? I personally just used buy now, pay later for the first time in my life recently, but it also was provided from a merchant, like the Polish equivalent of eBay. They just threw it at me one day. It just showed me up. We have evaluated you. We did the soft credit check. Here's the amount that we think you're good for. So Zilch does it completely differently. You are not locked in within that unfortunate setup with the merchant. You are agnostic. You're completely agnostic. Wherever there's a card payment that is accepted, online or offline, Zilch is there, right?
Yeah, Philip, I mean, it's an interesting, we could talk about this for some time. I think, a couple of comments I would make are the following. A few of these businesses that we tend to refer to, companies like Klarna or Firm or Afterpay, we look at these businesses and we take a lot of inspiration from these companies. At the end of the day, Klarna has been around 15 years. It's a long time. And if no one was going to come along and do it better, well, the consumer, it would be a very sad day for the consumer, right? At the end of the day, all of these companies, it's like we've even seen people like Jeff Bezos say before in Amazon, there will be a day that Amazon doesn't exist because someone will do it better. And at the end of the day, I think it's most important that we take that view for the consumer. It's about how does the consumer win ultimately. And so we take a lot of inspiration from these companies. We don't see that we outright have to go and compete with these companies. The market is so big. But ultimately, we will draw the learnings we can from them. And this is what we've done with Zilch. We'll apply that and we'll take the latest, greatest technology and we'll aspire to do it even better. And, the best way I can talk about our business is if I draw a parallel to someone like Amazon. And if you look at Amazon in the early days and you remove all the narrative fallacy around them and you really look at what happened, Amazon had built this online bookstore and analysts looked at this and said, this is a really cool online bookstore. But as we now know, they missed the bigger picture. They missed the point. Amazon had built this delivery infrastructure on top of which ultimately they could deliver anything. And when we think about what Amazon could have done, they could have built that same infrastructure and they could have sold it to one bookstore at a time. And they could have said to that bookstore, you integrate with us. And if your customer wants to buy a book online, we'll show it to them and we'll ship it to them for you. And they would never have become Amazon. They would have become a DHL, UPS, DPD, which, by the way, are brilliant businesses, but they're not Amazon. And what Amazon did is they said, we're not going to do that. We're going to go directly to the customer and allow them to buy any book in the world and we'll ship it to them in a day. But they got it from us. And with Zilch, we've taken the same approach. Other buy now, pay later companies are doing the other model. They're going to retailers and saying, please sell it to customers, right? It's just cash at the checkout. It's a commodity. What we've done is we're saying, let's go direct to the customer and tell our customer, you can buy now, pay later any way you like, online, offline, tap and pay over time, Amazon, eBay, Etsy, not on the high street, wherever you want, we will give it to you. And how we do it and how profitable we are doing it, it's not your problem, it's our problem. But we will provide this to you. And what's great is you got it from us, which means that now as Zilch, we have a direct relationship with our customer. And we have this digital network into which on the one side, we're plugging our customers. And on the other side, we have every retailer in the world. Now, what's phenomenal about that is today, buy now, pay later, paying for is to Zilch what books were to Amazon. It's the starting point. It's where we begin because it's very popular. It's what people want. But over time, we can listen to our customers and build new and exciting products. We can take 2 weeks to build a new way to pay. Pay in 4, pay in 6, pay in 6 months, pay with crypto, pay with loyalty, go retrospective and split. We can come up with anything new, build it in a week and ship it for a dime to every customer we have in the world, and they can use it at any retailer they like instantly. That's very different to point of sale finance, buy now, pay later. Klarna, etc. It's point of sale finance, right? And so we see the world a little differently. While everyone wants to compare us to buy now, pay later, we'd love to be mentioned alongside some of these companies because they're amazing companies. We just aren't one of those companies. We have a direct relationship with the customer, and we intend to do everything we can every day we go to the office to make the customer experience amazing and bring the most flexibility to the customer. We really aspire to be the best way to pay over time for the customer anywhere. So that's really the difference in how we see the world compared to point of sale finance.
So, dear audiences, you heard it here first. Different breeds, even though Klarna is a unicorn with 30 billion valuation, so 30 horns, a completely different species and not exactly the same competition, right? Because you're not asking for permission. You're supposed to be in my wallet, either digital or physical. You're not supposed to wait for a green light from any merchant, which, of course, I see both sides of the coin. The merchant strategy allows you go with one merchant, mass adoption, some larger volumes. But once again, if the merchant changes anything, you rely on another platform. Kind of risky, isn't it?
Well, that's the point, Philip. And again, coming to the point you just mentioned with distribution and volume, what are we trying to achieve? Are we trying to build volume, or are we trying to build an amazing experience for the customer? Which one? And that's the fundamental difference between buy now, pay later, traditional buy now, pay later. Their customer is the retailer. They're trying to bring the retailer more sales. We're not trying to bring the retailer more sales. We're trying to bring our customer a better way to manage their cash and pay over time for free. That's what we're trying to do. The consequence of us providing our customer that is we can bring retailers more sales. But it's a consequence of the first. In traditional buy now, pay later, they go and they bring the retailer technology, and a consequence of that is the customer can pay over time. And that's the fundamental difference in positioning. We will fight and die to bring the customer experience to our customer that they want, and the consequence must benefit the retailer, not the other way around. And so we think that it's fundamentally different. The other thing that I have to mention, which is interesting, is a lot of people that are not from a credit card, or let's say plastic card issuing space, sometimes think that in-store cards came after direct-to-consumer cards. And that's not true. In fact, in-store cards came first. So in fact, all way back when, it started with oil companies used to issue credit on cards specifically for trade. And that rolled into retailers, like in the States, companies like Target or Macy's, or over here, Marks and Spencer, etc. Those cards actually came first, but they were limiting, and you needed to collect them. And then we had very clever companies like Amex, companies like Capital One, that said, well, hang on, why don't we bring this experience directly to the consumer and let them go where they like? And and we sort of sitting watching the buy now, pay later space, and we feel like we're watching this movie happen all over again. But we're the only people in the cinema. It's like, why don't we go direct to the consumer the same way these brands did? I don't know if you remember in-store brands from 20 years ago, but I don't. I certainly remember Amex. So we know who we would like to be.
So playing chess, not checkers. And Amex had this tagline, "Don't live life without it." I think that was the first one that got them out there. So now slightly onto I don't want to call it a philosophical approach, but responsibility at the heart of lending, with no exceptions. And we actually have a very nice question in the comments, because they lead in. So I'll mention this as well. And everybody watching, please give us as many comments as you can and questions. Kriti asks, would you rather give buy now, pay later for everyone for small ticket items, or restrict it for higher ticket items, but to a smaller set of worthy customers? Which leads into my question of responsibility. No exceptions, some exceptions. What's your take?
So we could debate this for hours. The upshot of this is as follows for me. And I think in that question, in fact, the most important word there was credit-worthy customers. How is it that one assesses whether or not someone is credit-worthy, and how do you assess their affordability?
You tell me.
So traditional lending, as we know, you went to a bureau and you asked the bureau what they thought about this customer. There's only one problem with that these days. Young millennial Gen Z customers, our customers, between the age of 20 and 34 years old, are the most informed customer we've ever seen in the world, right? So everyone's got lots to say about our customer. Oh, they're impatient and they want things and they want them now. People talk about our customer a lot. What we think about our customer is they're the most informed customer the world has ever seen, right? And so our customer won't make the mistakes of their parents and their parents' parents. They won't go and pay the bank for that ridiculous overdraft or the credit card or the payday loan. They're not going to do that. Our customer's too smart for that, right? And so our customer never overpays for anything. They don't overpay for flights. They don't overpay for accommodation. They don't overpay for travel. They don't overpay for anything because they can price compare at the tap of a button and they know how to do it. So what we have to really do is we have to look and say, if you have a customer that's smart enough not to take a credit card because they understand that there's going to be fees and interest and retrospective fees and interest, how do they build up a credit score? How do we deem them creditworthy with traditional ways of measuring this through bureaus? And the answer is it's difficult. You can't do it because they don't have a credit history with these bureaus. And so our take on this is we need to change the way we assess, not creditworthiness, but affordability. And that is what we worked quite hard with the FCA on, for more than a year in building this product. And it's what the FCA is now going to be commenting on. We feel very strongly in terms of the regulation coming. How do you actually know that this customer can afford this loan? Not does a bureau tell you that they're creditworthy because they had a Macy's or a Marks and Spencer card and paid it off 5 times. I think those days are changing. They're old. It's like driving a car looking in the rearview mirror. It makes no sense. So for us, the reality is, to answer the question, we've got to be very careful on who we believe can afford to pay over time. And the long story short is, if we use a combination of soft credit checks and affordability checks that are more traditional, combine those with open banking data and our own proprietary scoring, what we can then build is a policy that takes a better view of a customer and says, ultimately, do we think you have the cash flow to afford a quarter of this checkout today, in 2 weeks' time, 2 weeks after that, and 2 weeks after that? That's ultimately what we're trying to assess for you. If we don't think you can afford that, we don't allow you to check out. This is not a credit card product, and this is what the industry needs to appreciate and people around the business needs to appreciate. Credit card products, running balance, the entire business model of credit cards is to overlend to you so that you cannot afford to repay in the 45 days because they can then charge you the fees and the interest. So the very nature of the product is to give you money you can't afford. That's why you get that envelope every month saying, we've upped your balance, we've upped your balance. And you're thinking, I don't know, how could you have upped my balance? I don't understand. Well, let me explain. Because they want to charge you. They want you to carry a balance. With Buy Now, Pay Later, it is the most affordable way for a customer to defer payment today the market's ever seen. Why? Because it's built the other way around. Because we only make a fixed fee when you check out, in fact, it costs us money for you to have to not repay us on time. So we want our customer to pay on time every single time, right? And that fundamentally makes a big difference when you compare it to running credit. And so our customer knows this. And that's why I think, sorry, it's a bit of a long answer, but you need the context. I think the reality here is, would we rather give Buy Now, Pay Later to everyone on small tickets? It's not a case of if it's a small or a large ticket. It's a case of, can the customer afford this with their cash flow? The ticket's irrelevant because, frankly, I also see arguments being written about in Buy Now, Pay Later. And again, people who write sometimes are misinformed. And they say, why would someone have to split £17 in 4? Surely that means that this customer can't afford something. And that's not true. Customers use Buy Now, Pay Later to manage cash flow, right? This is a cash flow management tool. They're not using it necessarily because they don't have the £17. They're using it to manage the peaks and troughs in their monthly cycle or their weekly cycles of payment so that they can smooth it out. So if I can go and I can split everything, £5, £15, £20, £80 into 4, so that I can group these payments into weeks moving forward, I can smooth out my cash flow and manage how it is I'm repaying on a week-by-week basis or month-by-month basis. And that is why people use buy now, pay later, right? They don't use it because they can't afford the takeaway KFC for their family that evening. They use it because it's cash flow management. And so the short answer is we should be providing this tool to anyone who can afford it, regardless of the size of the ticket. And that's the answer to the question.
I'm happy with the answer. Akriti, I bet, is happy with the answer. Tell us in the comments. And we've got another question before we come back to this, but this is so relevant to what you were saying a moment ago. So I want to share this, especially that the person has given us 4 comments in a question. So eager enough to be posted now. Does Zilch offer factoring? Then it would be really interesting for us. My question is not on the consumer side, but on the business side. Zilch sounds amazing. We work with Klarna to offer our customers to pay over time. Can you please tell us, does Zilch offer factoring? Would be really interesting to know, because as a business, we struggle with the risk policy from our providers for buy now and pay later. How is credit score checked? Is Zilch bringing innovation there? 4 comments. I made it into one. So yeah, let's target this.
Yeah. So I mean, just to answer the first question there, today outright we don't do factoring. So we're working on a Zilch business to business proposition. And so this is something that we're busy looking into at the moment, but we don't have a product line for it. So Zilch for Business product is something that we're working on. And obviously I can then update Walid and let him know when we have something in that space. So on the factoring side, we don't have anything yet, but we're looking at it. We think buy now, pay later in the B2B space is a massive opportunity. In terms of how we assess credit, this is the fundamental difference when you look at Zilch. I think that retailers will always want a way to provide finance to their own customers. That's natural and it makes a lot of sense. And for that, they should use a buy now, pay later provider like Klarna or like Affirm, etc. These are point of sale finance companies. Frankly, you may as well run a process. They can all give you the lowest price possible and you pick the best price, right? Because it's a commodity. Now, what we do as Zilch is different. We bring you the customer and we give the customer the money to pay. So the difference is when Zilch brings you a customer to your site, we've already pre-vetted them, qualified them, and given them a balance that they know they can spend at your site, which means you will get 100% acceptance rates at checkout. You will not have Zilch decline the customer at checkout. They've been pre-vetted and they come to you with intent. So this is why brands are so interested in working with Zilch. And we've really only just started working with brands right now. We're running some big campaigns very soon with a couple of the really big brands, where we are allowing brands to really go onto the Zilch platform and start to be able to target Zilch customers and bring them value and offers, and allow those customers to now go and get either discounts or, of course, be targeted when they have liquidity, and allow that customer to arrive at the site with the with the ability to spend and the willingness to spend too. So for us, what we're really trying to build is a super affiliate platform that not only drives traffic to you, but at the same time gives the customer the money. And we feel that differentiated. We think that that's a lot more valuable than money, than cash at the checkout page. You can get that from lots of people. You can get that from a lot of banks. And you can get that from other buy now, pay later. It's cash.
And working a lot with product and being a product by association person, given that this is Netguru, I can tell you that a lot of small things are to be appreciated here, like the bounce back rate. If there is no chance of the customer being rejected just before that, then both the store is happy, but also I as a customer, nobody hates anything more than finding it out, e-commerce, finding the size, the color, you're almost there, and then you're not
rejected, right? So I mean, we had a lot of users when we launched the product tell us exactly this. They were using other buy now, pay laters. And of course, let's say someone like ASOS is running a sale. So you're staying up until 12 at night, you're loading up your basket, you get to the checkout, you click the pink button and it says decline. It's annoying, right?
Ever, yeah.
And now you lose the items in the basket, you've missed out on the sale. So for us, this is the value we bringing to a retailer. Is we're saying you could go and run a promotion. We could let the whole customer base of Zilch know this. We could let customers on Zilch who shop at your competitors know this. And we could let customers on Zilch who have got liquidity know this, and we could bring them to your retail website, and you know that they're pre-qualified for an amount of money. They're going to load that basket and buy it. And we're not going to reject them at checkout, which means they're not going to call your call center and complain. So, so ultimately for us, we're seeing that brands really like this approach, not to mention that we're a fully integrated omni-channel provider, right? So if you go with traditional buy now, pay later, these are proprietary systems. You have to integrate them. Whether that's a widget or whatever it is on your website, you got to do the work. And if you're the type of business that has brick and mortar stores, offline stores, it's a mess. Now we've got to put a QR code here and we've got to try and do a barcode, and it's a mess. We're not doing any of that. We're issuing our customer a virtual MasterCard. They can come to your site. You have to integrate nothing. They can check out using their MasterCard. And the greatest thing is you could push them an alert through Zilch and say, you're a kilometer away from our store, get 10% cash back, come to the store now. The customer can walk in and tap and pay over time with Zilch in your store, and you change nothing. No infrastructure change, no integration, and away you go. So for us, we really think, a lot of people speak about disruption. I think the best disruption happens when there's no change. That's true disruption, right? If there's a lot of change and it's uncomfortable and you're sticking QR codes, that for me is not disruption. That's a pain in the ass. So for me, true disruption happens when there's no visible change, but something intrinsically is different. And that's what we've created.
I am so liking this interview, and if I had an earpiece, my content team would be telling me that there are so many quotes from this. Thank you so much. And I wanted to circle back to just before we jumped into this question concerning the B2B approach. What we are seeing with companies having lines of credit, access to liquidity, all of that is simply being taken onto the small, mere mortal who dares to be an individual and not a huge corporation, right? Because just like you said, it's a matter of scale. It doesn't really matter that it's 17 quid. What matters is maybe I am getting paid tomorrow. Maybe that's exactly the same thing that we're seeing, because there is a strong trend. I've seen a couple companies tackle this where they sort of help you combat the problem that you have as an employee, where you are, for example, being paid not in weeks, not in 2 weeks, but in a month. And just because your liquidity runs out days before the payday, you get yourself into unfavorable situations financially, having to go for short-term loans or anything else that is supposed to bridge that gap. And it's just a small cash flow problem. Any company can get some extra liquidity. Why would we deny that to the individual?
Absolutely. And traditionally, as we all know, unfortunately, very low cost or cheap credit has typically been reserved for the wealthy. And it's the same thing we're seeing with, why is Robinhood so popular, or these trading apps so popular? It's because for the first time ever, we have people like us, like all of us, are able to download an app and buy equities. Before, you would have to go queue up outside Lloyd's Bank and wait for them to say, do you have a portfolio of £1 million or more? In which case, we would love to introduce you to this banker in a suit who can walk you through and give you an equities portfolio. Why? And it's the same, our view is the same here. Why is it that you've got the wealthy able to manage cash flow? Because even billionaires have cash flow problems, but they get to manage it for free. Banks will give them the money for free or for a very low cost. Why is it that they have access to do that? And no one says, oh, should they be doing that? Why is it that every person in the world doesn't have access to manage their cash flow for a very low cost or preferably free? And that's exactly what we're looking at providing here. So the way I see it is that this is, the democratization of access to free or low cost credit, and ultimately, I think that it's something that should have happened a long time ago. I always do find it fascinating when you start to roll products out like this. And we've even seen this with companies like Robinhood in the US, where now everyone's questioning, should we really be able to give these services to people? It's almost as though the old institutions and the wealthy don't want all of us to have access to buy equities. No, it's irresponsible. They don't know what they're doing. No, we do know what we're doing. In fact, we know more about it than you. And so I think, for me, we really have to vehemently defend the position of a product like this. This is the most affordable way for a customer to defer payment today that exists in the market, ever. And we should not take that away from people. So we really want to work hand in hand with the FCA to make sure, the way they see us. And by the way, the FCA are very forward thinking. So I think they're going to come up with something phenomenal here that's going to protect this customer of ours and make sure they can continue to manage their cash flow for free, rather than pushing them back to traditional credit. I mean, frankly, if you look at some of these overdraft fees, we should be calling the banks payday lenders. £2 a day for an unplanned overdraft on 15 quid.
Daylight robbery.
Yeah.
I gotta be the time police because we've got a sweet 20 minutes left. Couple questions from me, couple questions from the audience. So let's just be mindful of that time constraint. I can stay a little bit longer if you can. That would be great as well. But extending over 60 minutes just doesn't always work for those interviews. So FCA, that's what you mentioned. That's what I want to hear more about, because the gist of it is that, as I understand it, other companies, not going to name any names, but there has been this neobank starting with letter L recently in the news, how they did not really manage to work it out with the FCA, and you managed to work it out with the FCA, but you didn't just manage. You anticipated this. You started this way before it was needed. So by the time that you need it, you would have it. Tell me if there are any gaps to fill in here. And also, why do you think you were the only one, if you were the only one, or the very limited number of organizations that decided to do the rather reasonable thing of figuring out the regulation rather than trying to avoid it?
I think the short answer, I would love to tell you that we are amazing visionaries and we saw it coming. I would love that to be the answer, but it's not true. The reality is you can do things the easy way or you can do them the hard way. And sometimes doing the right thing is not the easy way. And so what we chose to do is the right thing. At the end of the day, this is a debt instrument. Doesn't matter how cool or flashy or awesome it looks. It's a debt instrument. It's something that creates a liability for the customer they must repay. And so for us, our view was this should be in the regulated space. It's something we should speak to the regulator about. We didn't know that the regulator will change it. We didn't preempt this. All we did is we looked at it and said, what's in the best interest of the customer? The best interest in the customer is that they have the support of the FCA, the ombudsman, etc. This is a debt instrument. And so unfortunately or fortunately, what we did is we took a view and we said, guys, this is the right way. It just so happens that the right way will not be the easy way, but we must do it right. And so that's what we did. So there was no preemption or some master plan and us sitting going, ooh, in 2 years this will happen. It's not the case. It was the right thing to do. That's why we did it. So I hope that answers the question.
It does. And everybody remember that even a step back, if you're going on the step to the wrong direction, is a good step. You're on the right track if you're taking a step back from that. So I have some questions that actually are nicely merging with what I'm seeing in the comments. So I think we will have some more time for some broader answers. Everybody, please give us more questions if you want to ask anything to Philip. And now onto the global outlook of players. We've established at the very beginning of this that this isn't really a ring with you versus the typical buy now, pay later, but just generally speaking of the global outlook of players, US versus EU, are there any cultural differences there? I imagine that people spend differently for sure, but does it impact the business model so that, for example, one would not be able to enter the other market so easily due to those differences in how people spend?
I mean, the short answer is absolutely there's cultural differences. I mean, absolutely, right? There always are. I mean, if you look at Europe anyway, country to country, countries are unique. We always used to laugh when we spoke, when we were running our South African business, we used to laugh when people said to us, we want to launch in Africa. And, they almost talk about Africa like it's one country. Yeah. It's country to country is so unique, and Europe is the same. It's no different. If you take England to the rest of continental Europe and Germany versus France, the cultural differences are vast. So for us to think that there's no cultural difference between UK and the US would be naive. There's a massive cultural difference. And I think, we've seen evidence of that with some of these big buy now, pay laters who have tried 5 years ago to go to the US and dismally failed. and had to move back and move out. And we've seen this with some digital banks that have recently tried and it's failed. Now, and there's a reason for that. I think fundamentally, does the product market fit look good for us? The good news is we have one or two other companies that have the old model, but for the consumer, the same repayment cycle, that are already in the US spending millions of dollars doing our product market fit for us. We should probably thank them. And so they're doing a great job of going and doing the product market fit for us right now. And thankfully, people are using the product and seem to be very excited about the product in the form it's currently in, even though a lot of Americans get paid bi-weekly rather than monthly like we do here in the UK. And so we don't see that we will need to fundamentally change the functioning of the product, but ultimately we need to change the way the product speaks to the customer, more so than how it fundamentally works. And so we're busy working on that right now. The next market for us is the US. That is the next market we will be launching. And so, we're busy looking at appointing the team there very soon. We've got a number of the partners we already require there lined up, and we'll be announcing these things very shortly. And ultimately, then it's a case about getting the product localized to speak to Americans the way they expect to be spoken to, and also from a customer support perspective, deal with our customers in America the way they expect to be dealt with. I think to copy and paste and think it's going to go well is a mistake. So we're going to invest a lot of time and money in making sure we Americanize the product and really build it for the way that an American wants to see and interact with the product. And we've learned this in how we rolled our previous business out into 22 plus African countries. Every single one is unique, and the ones you copy and paste never work. So, we really will do a lot of work to localize the product for America.
I am more than happy to stay a couple minutes after this interview ends and help you with any other connections to the US market. Because personally, or either in Just Netguru wise, we have a whole bunch who would love to work with you. But a question from the comments. Other than the compliments for Philip and Philip, where do you see your target market in N years? Is there going to be a massive consolidation of players, including Zilch, of course?
Yeah, I think consolidation you can already see is happening. Companies like ZipPay out of Australia are clearly on a buy rather than a build strategy. They've just bought two buy now pay later companies. You saw, for instance, Afterpay bought ClearPay here in the UK to launch in this country. So some of these guys are on a buy strategy rather than a build strategy. And I think you will always see some consolidation. The only thing that we do know is if you look at credit card debt in the UK a few years ago, it was almost 80 billion. And buy now, pay later debt's about 2. So, we think the room to grow in this space is so massive that ultimately we think, this is not a winner takes most even. We think that you can have, 5-6 players build phenomenal businesses. And that's in the UK, of course, third largest e-commerce market in the world right now. But, you've got the US, you've got other very large countries, Germany, France, etc. And so, so we think that there will be consolidation, but ultimately, there will be a number of players we believe that will persist. The question is, what value will you continue to bring the customer? Are you going to just take this approach of undercutting the competition to win deals with retailers? Or are you going to focus on value for the customer? I think if you're going to do the first, you're not going to last. If you're going to bring value to the customer, that's different. And that's what we intend to do. We think that merchant acquiring is not a business we want to be in. We want to be in the game of direct-to-consumer relationships and building value for that customer. And of course, combine that with a lightweight model like we have, you can have borderless scale. So ultimately, what we would like to see in the next few years is we want to be live in 35 countries in the next 2.5 years. That's our aspiration and goal. We would rather identify our core users who we're getting to know really now well, who our core users are and appreciate this and want this and use this product. And we'd rather go and find all those users in every country we can than go and spend ridiculous, huge sums of money to try and convince customers outside of that core user base that maybe they should try it. And so that really is the strategy that we'll be deploying.
My spidey sense is tingling after this answer and from some things that you said at the very beginning, that connects my brain to what Elon Musk did with the approach of open sourcing things, of making sure that it's not about us hoarding the intellectual property and we can be better than everybody else, but rather, here's this, everybody take from it. Let's level the playing field, make it better for everybody. If you're going to be a winner, you're going to be a winner at least on a level playing field, right? So kudos for that. Another question from the comments. I will just wrap up the interview with my two comments because this is very juicy what we're seeing here. Lohith asks, how do you make sure of low defaults or late payments? Is the credit score of the customer only based on financial health or on social parameters? As much as you can, unveil the secret sauce of the soft credit score checks.
It's a combination. So, we start with your more traditional soft credit check, affordability. We then include open banking, which is very important for us. So open banking gives us more of a view really on affordability in our minds. We can see liquidity day to day, week to week, month to month. How much cash do you have at the end of each day, week, and month? And ultimately, when you're checking out for, let's say, £100 today, do you have £25 of disposable cash today? And will you have that in 2 weeks, the 2 weeks after, and 2 weeks after that? That's really all we're trying to assess. And as long as we're convinced that that's the case, then we obviously feel that this is the appropriate decision to make. So we start with these things, which is already a lot of data, and then we roll you into an ongoing policy, which is proprietary. And that can take into consideration a number of parameters, including, in some cases, social or handset device parameters, what the customer is willing to share. And, and what we found, though, fundamentally is that ultimately, a lot of companies these days, and this we find quite funny, especially in lending, will talk about the secret, beautiful, amazing AI, and they're going to tell you that your Facebook friend went to Ibiza, and so you do this differently. And actually, what we found is that the information value of a lot of those attributes is low. The reality of the situation is you need to build a relationship with the customer. You need to take a view on affordability, and by that, I mean you need to see their liquidity, their cash flow. And then the reality is you build the relationship in a proprietary model that has to take into consideration how they make use of your product, how often do they use it, where do they use it, for what do they use it, what time of day do they use it, how often, and so on and so forth. And do customers repay, and do they repay early, late? How do they make use of it? And ultimately, that is the most important thing that we find to have high information value in building our risk policy.
If there was a dictionary, the definition of a model guest speaker, that would be you. Every answer you give me is a segue into my next question. So extremely eloquent there, because you speak of data, you speak of understanding those things. Accredi at it once again. Are you seeing any specific categories or industries in Zilch, the buy now, pay later usage, and how is that data being used for cross upselling? Because just like you mentioned, you're not in the business of bringing the customer to the retailer. You're empowering the customer. If they go to the retailer, the side effect is great. At scale, at volume, they should be going to many retailers. Where's the magic equation with data and everything else that was asked?
Yeah, I mean, so the industries we see lots of usage in, which is interesting, is what you would probably expect. So we see this in fashion, obviously is a big area, electronics. And then at the same time, where Zilch is playing a fundamental role, and we find this interesting, where there are not much competition, is actually in grocery, food, and and kind of more staple, like for instance, home payments, grocery, etc. And what we see there is that customers who are using Zilch to interact with retailers that we work with, companies like Iceland or companies like Marks and Spencer grocery, customers make use of the product frequently and pay back on time and every time. And what we find is that this is a typical example of cash flow management that we really see. In areas like fashion, we also see customers making use of the product to access deals. So there's a deep discount on some new product launch, and otherwise they wouldn't have the money. Now they can access the money not only to spread the cost affordably and responsibly, but actually to get a better deal. And so it's a lot of the markets you would expect are the ones that we see a lot of volume in. And as I said, mostly you see that in fashion, electronics, and grocery. But we are sure that we think travel might be something very interesting as, of course, now COVID starts to ease. And the great thing about Zilch is, of course, you can use us anywhere that MasterCard's accepted. So you would also be able to use us for travel. So we're going to be looking into partnerships specifically in that space. But these are the industries we see a lot of traction in.
And the final one, once again from McCready. We're talking about you helping me out with the payment, with the cash flow, but are you going to start blooming into something closer to a neobank with some cash management, investments, insurance?
No. So the short answer is no. And the reason is that, I think this idea of a super mega app, when the app stores initially launched, we all started downloading lots of apps. And then all of a sudden the narrative was, oh, we need to consolidate this. People don't want 5 apps to do 5 different things. But that story's changed. And I think if you think about how we all, people tend to forget that all of us, and even those of us that are running a business, we're consumers. How do I use apps? I don't want one app that I'm meant to use everything in that app for everything, whether that's buying gold or fractional ownership or crypto or fiat or investments or portfolios or low and grows or whatever that is. I don't know if I should have to do that in one app. In fact, I actually quite like knowing that I've got an app I use for crypto, I've got an app I use for equities, I've got an app I use for banking, and I'm quite comfortable with that. So for us, what we don't want to try and be is this one-stop shop that's going to throw all of these products at you. Fundamentally, what we really want to do is be 10 times better than anyone else at providing you pay over time. We want to do that really, really, really well. So you should come to Zilch and use us as the best way to pay over time anywhere you like, and you should always want to use us for that. That's fundamentally what you should start with. And then ultimately what we will do, though, is we are looking at what we could offer you around that transaction that's meaningful. That's not just off to the side, like, oh, do you want to buy some crypto? But maybe do you want to link your crypto wallet and pay over time with crypto? That's maybe interesting. Do you want to, for instance, round up each Zilch transaction and put it in a Zilch savings account? We, of course, can use those deposits to fund other transactions and pay 5% per annum interest on that, as an example. Well, that might be interesting. So there's a lot that we would look to build moving forward, but what we wouldn't want to go into is trying to provide a one-stop shop type digital bank. You could use Revolut to do a lot of those things, and you should probably do that, right? I hope that answers the questions. Things that are fundamentally complementary to what we're doing are interesting. And what's great about our business is that we have a fintech business with a business model. So, we're not handing out shiny cards but make no money. So we have to throw lots of services at you and hope that you take one of them. Our core business makes money. And so, we're excited about that. We don't have to rush to throw a whole bunch of third-party services at you. We can go and we can very carefully curate products that are meaningful to you around the experience we give you, which is pay over time anywhere, and launch those to you, rather than just hoping you're going to take a metal card for no good reason.
No pointing fingers or throwing shade there, of course. The 2 last questions that are from me. These are questions that we ask to every speaker. So question number 1, what is your decision-making framework? However broad, however narrow, the simplest one is this cake? Yes. Is it good? Objectively, yes. Is it good for me? Perhaps not really, or not in those quantities that I would like to. So mirroring that, how do you make your decisions as a CEO? What helps you just rule of thumb this?
I would say off the top of my head, it's 2 things. The first is be the last person in the room to speak. That helps you make a decision because, frankly, we've got amazing people in our executive team and throughout the whole business. So, if there's a decision to be made and I can sit in the room and have all of them give their opinion first, they're a lot better at what they're doing than I am in terms of, I don't know how to do the fraud-based stuff as well as our fraud guy. I don't know how to do this as well as the women doing our modeling, etc. So if we let all of them contribute and give their educated opinion, it's a lot easier to make a decision. So firstly, I would say be the last person to speak helps, and then ultimately just make one. That's fundamentally, for me, the rule. Decide. It might be wrong, but make a decision. And especially in a business and a space as fast growing as ours, decide, make a decision and live with it. You can change it later if you have to, as long as you're willing to say when you are wrong. But ultimately, I think a lack of decision making is a really big problem. It's what kills companies, especially in a fast moving space like ours. So what we say is, let's make an educated decision fast. And we all understand if we have to pivot away from it in the future, it is what it is. We'll own it and say we were wrong, but at least we made a decision. So ultimately, I would say just decide.
So keep your eyes and ears peeled, and at the end, just do it. That last question, that's from me. I'm handing you a remote magic wand, and I invite you to abracadabra it so that every 12-year-old in 2021 learns what? We've heard coding, emotional intelligence, financial prudence, whatever it is. Even if you're repeating one of the ones that I mentioned, just make it yours. What's the why? Why do you think that those kids, couple years when they're 18, that would be a killer feature for them, so to say?
Yeah, I would probably say, from a skills perspective, I would definitely say learn how to sell. Ultimately, if you can sell, you can do anything you want. And the reality is, people underestimate this, but all of us actually spend every day of our lives selling. Even if I look at our business, we don't really have any salespeople in our business, but everyone sells every single day. We're either selling stakeholders, or we're selling to investors, or we're selling to consumers, or you're selling to another department. Everyone's selling. And so I think from a skills point of view, I would say, learn to sell. If you can sell, you can do anything. And then the last, I guess, thinking about from a more high level perspective, the last thing I would say is, don't be fooled by people who are successful, or who these people you look up to and are successful and have done amazing things. Don't be fooled that there's some superpower or secret. There really is none. There is nothing too difficult for you to do if you intrinsically understand how it works. So, you sometimes, when you're younger, you might look at a doctor and think, oh, how could you become a doctor? Or you look at a really successful business person, how could you do that? And you think maybe there's some superpower that you don't have. What I would say to all of these kids is that that's not true. People are just people. And actually, that's why when you meet a lot of these people, it's underwhelming, because you realize it's just somebody who's taken the time to break this problem down to its fundamentals, understand it to the point that they can actually speak on it more so than you, and more importantly, iterate it and make it better. That's all they've done, really. So there's nothing in this world that's really that complicated, and everything is being done by people. So, really, if you break something down to its fundamentals and understand it, you can really do or change anything. That would be my, I think, high-level type of view.
Philip, thank you for this answer. And I want to ask you, because we are slightly over time, but there's just one last question in the comments. Are you busy, or shall we entertain it?
Yeah, we can definitely we can do this, yeah.
So Paul asks, interested to hear following the Woolard review, and I'd love to hear from you a little bit for the audience what that is. Do you think that Buy Now Pay Later will be mandated to report on a more frequent cadence than monthly, perhaps even daily?
Yeah, so the Woolard review was put together by the FCA. So really, they, under pressure to look into Buy Now Pay Later, they went and put this review together, and really report on whether or not they thought that this needed to be regulated. Of course, we know the outcome of that was that they believe it does need to be regulated. And the very short answer to the question is yes. I think that the FCA will most probably take a view on a few things. One, how are retailers promoting such services, and do they disclose all of the fees? And then two, affordability. How is affordability being assessed, which we know is the FCA's major focus on an ongoing and consistent basis. And I think what gets baked into affordability is the frequency and cadence, which we've seen before in the past anyway from them. So I think the answer will be yes. Of course, at the same time and in the same breath, we would like to see, I think everyone in the industry would like to see, for the sake of the consumer, that the FCA, really looks at this and thinks about this and makes a considered decision on this. Because again, if a customer is using the product for cash flow management, then the frequency needs to be that which supports cash flow management. In other words, the customer uses this product frequently. The reason why frequency for payday lending in the past was a problem, and rightfully the FCA stepped in and said, we don't want to see frequency in payday, was because of the fees and exorbitant interest. And so what would happen is, if you see a customer using payday again and again and again, it means they are in the debt trap. They are in the cycle they cannot come out of because the fees and interest keep dragging them down. So they borrow again. In buy now, pay later, there aren't any fees or interest. So if the customer is using the product for cash flow management, you would like to see cadence. You would like to see frequency. This is how they manage their cash flow. And it's not costing them anything to do so. In other words, the position doesn't become negative or eroding to their disposable income. So I think it's a complex situation. We obviously all trust that the FCA are really forward thinking. We think they're going to do a great job of this. And we look forward to what they come up with, and hopefully take some advice also from the institutions in the space. But we certainly think there'll be some focus on this, but I would hope that it's reasonable.
Paul, that definitely answers your question. So, Philip, thank you for being a rockstar guest speaker. Dear audience, thank you for being a rockstar audience. A lot of questions, a lot of interaction. Really enjoyed it. So, Philip, like I said a moment ago, thank you so much for today. Really appreciate it. It was really informative. And I can only do this before wrapping up. I wanted to invite everybody watching this to next week's episode, which is going to be with, it's a secret guest. So stay tuned to find out, but it's going to concern retail. That's all I can tell you so far. So everybody, thank you so much for today, and see you next week.
Thanks a lot, guys. Thanks, Philip. Cheers.